Have you ever bought at the top or sold at the bottom just before the price reverse? Come on guys, who are you kidding? We've all been there.
Are you kidding me?
Too many traders keep on doing the same mistake. Just keep on buying at the top before the breakout or keep on selling just before a bearish breakout. And I'm like, come on man, you can't be doing this. Jokes aside guys, your personal DJ aka Calibri Trader aka Thanos is going to show you why this actually is toxic and you should not be doing that. And now absolutely seriously going to the drawing board. If you're serious about trading, you have two options. Option number one is start with my free ebook, which will give you 5 proven day trading strategies. And option number two is accelerate your journey to the fast track day trading program, which will be basically working directly with me. So I can be saving you from the costly mistakes that other traders are doing. You'll be literally copying and pasting the same things that I and the other students are doing. You will be either trading on your own account or passing a challenge. Now back to the video guys. Okay guys, let's look at a cable or pound versus the dollar pair and then see how many times you would have been stuck in breakout mode. So the most recent example, this is right here. A lot of traders, I'm sure they were literally positioning themselves right there, waiting for this breakout, and unfortunately, bam, they were actually stopped out here on the way down. And now I'm sure a lot of traders, they're positioned to perfectly sell this breakout, this bearish breakout. So they're waiting for the price to go even lower, but then bam, let's see what's gonna happen in the next few trading hours, guys. But let's go to the drawing board and I'm gonna share some wisdom there. Now picture this, guys. This is your current price. The price has broken above the resistance. So let's say if this is your resistance and the price has just broken above the resistance, and this is you, by the way, drinking a nice cup of coffee here. Wasn't a great example, but let's say this is your nice cup of coffee. So the price has broken above the resistance level and retests from above. And good, you think this is following the 4th stage of a breakout trade I read on this obscure forum last night to the T. And okay, I'm exaggerating a little bit, but you get the gist. So you place a long trade here in the expectance that, you know, the price is going to continue going further higher. But what happens in reality, by the time you're brewing your coffee, the price actually goes lower. It's plummeting through your entry and your stop loss is hit. So you're feeling disorientated. You're staring at the charts in disbelief with a lukewarm cup of coffee and you're asking yourself the question, isn't that ironic? Well, it isn't. It is in fact called a bull trap, and it's one of the least known patterns that fools beginner traders day in and day out. So what exactly is a bull trap, guys? Bull trap is nothing else but a failed attempt for those bulls here or those buyers to push the price higher. So instead of the price going higher, and I'm actually running out of space here, what the price does, since there are not enough buyers, the price just will go lower and lower and lower. And unfortunately, your little stop losses would be stopped out on the way down. And this pattern, you can call it anyway, guys. The reality is actually it fools traders day in and day out. I like to call it the anti-Robin Hood pattern because instead of giving money to the poor, it actually takes money away from the poor and gives them to the rich. This is how nasty this stuff is. Okay, so this brings us to the next logical questions. If those patterns are so good, why they're so overlooked? And to be quite frank with you, it took me 5 years before I stumbled upon this pattern. Before that, I even didn't know about its existence. So this brings me to potential reasons for that. Reason number one, it is simply overlooked. People don't talk about it. They haven't heard about it. But reason number two, which for me is the more obvious one, probably the most logical one, it is if you look at it from a conspiracy point of view, this might be a way for market participants that are already profitable to continue to be profitable without sharing their secrets, their little trading secret with the 5% of retail traders that are actually profitable. Okay, you'd say this sounds already too good, but what about if you're in the opposite scenario? What about if the price has marked actually a major support level and it's going to make a breakout? Isn't that better for me to try to short sell it here as opposed to anything else? And the answer again is no, no, no. Instead of doing that, what a clever trader, a smart money trader would have been doing, if you want to use this fancy term, which means absolutely nothing, but if you want to actually do something smart, this would be waiting for the price to go below this level and then give you a sign that there are not enough sellers to sustain the selling pressure. Therefore, if there are not enough sellers and not enough pressure to sustain the further selling, guys, what would be the most logical thing to do? So there are two things. First, you can simply not do anything, but then second, very logical thing would be to start looking for buying opportunities, because next thing you see is the price going further up. If you were already shorting here, the first thing you're gonna notice is your stop loss disappearing because it has been already hit, and then the price just going further up and further up and further up. And if you remember how I started this video, I was showing you this example here when the price was basically here. Unfortunately, I don't have that much time to wait for the price to go all the way here, but you can already see if you were short selling at these points, you would have been stopped out, because what most traders are doing, positioning their stop losses just above the nearest support level, and this is where your stop losses would have been already cleared, guys. And this shows you exactly why you should not be shorting just before major support level or a major resistance level. I hope it makes a lot more sense now, but if you have any questions, you can always drop me a question in the comment section below. So after watching this video, you should be familiar with this beginner's trap. So don't ever do this again, guys. Promise?